This is Russia, the largest country in the world and the primary belligerent in what may prove to be the most consequential conflict of this century. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. Ukraine is still being invaded, but is a fight that is unlike any other, and it's difficult enough with economics. Russia's vast size, immense resource wealth, and large population, its economy is comparatively kind of pathetic. It's strange to call the 11th largest economy in the world inadequate, but it's not headline figures that tell full story, as much as its squandered opportunities had a few things been done differently over the past 3 decades. There is no reason to expect that Russia couldn't be one of the wealthiest, most prosperous nations in the world today. This was a country in less than 10 years grew its output by over 800%. It had a population that was ready to embrace free market and work their butts off to build a better future for themselves, and it had a world, by and large, wanted to do it well to avoid regressing into the Cold War. So, the economy of Russia as we know it today started at the end of 1991, after the Soviet Union was officially dissolved and the Russian Federation was born, out of its ashes, alongside Armenia, Azerbaijan, Ukraine, and other countries. Mikhail Gorbachev, the last leader of the USSR, wasn't overly keen and sticking around as a public figure any longer than he needed. To that left Boris Yeltsin, a former high-ranking Soviet politician, as the singular ruler of the new Russian Federation, while the West was thrilled that the Soviet Union, their arch-nemesis, for better part of half a century, was gone. They were in many ways more scared of Russia currently than they were in the years before. This represented single most dramatic shift of power in world history, even ignoring the humanitarian crisis of millions of people. Yeltsin was at the end of the day a former Soviet politician, so there was no reason to expect that he couldn't just revert the country to a Soviet system of government, seeing this potential threat and wanting to smooth out the situations as much as possible. A plan was put in place, based off a handbook published by the International Monetary Fund of other international financial institutions. If you think about a country that is failing and their currency is gone, what comes into your mind? Most people thought about the so-called Washington Consensus, because it was formulated by the kinds of institutions that have their offices in Washington, D.C. Washington Consensus is the IKEA instruction book you use when you are trying to build a national economy from nothing, but flat-pack components, and it has 10 basic instructions. Broadening the tax base and adopting moderate marginal tax rates, interest rates that are market-determined and positive but moderate in real terms, competitive exchange rates, trade liberalization, the liberalization of imports with a particular emphasis on elimination of quantitative restrictions like quotas licensing and tariffs, liberalization of inward foreign direct investment, privatization of state enterprises, deregulation, and legal security for property rights. Basically put these things in place, and you should have an economy now. Some of these were easier to implement than other trade liberalization. I guess it didn't take them too long to embrace capitalism. After all, that's not very important. But what's very important was the point about privatization of state enterprises. You might think, given examples like China, that opening to international trade and embracing free market was something to guarantee economic growth, or at least in the short term. Unfortunately, that didn't really play out in Russia. In the decade following the fall of the Soviet Union, Russia's GDP was halved. The biggest reason for this was the botched privatization of the nation's industries in the Soviet Union. All industry was owned by state, but the Washington Consensus calls for value-adding industries to be privatized. Governments all over the world sells public assets off to free up cash, and former communist nations, theoretically, have the most to sell off. Russia did have a lot of valuable industries, natural resource extraction being the big one, but there was also a telecommunications, utilities, and manufacturing. The question is, who should this go to? A logical answer would be the highest bidder, but there are some problems with this. At the time, the highest bidder would have been companies from the West, and it was understandable that the new Russian Federation wasn't ready to stomach an American company controlling their oil fields just yet. Corruption that followed almost cemented Russia's fate for the following decades. But it also meant that the country didn't raise nearly as much revenue as it could have, had this privatization process been handled more fairly. Not only ran these industries poorly, but they also invested nearly all the money they made from operations abroad. This process was assisted by the Russian government's insistence on maintaining a high foreign exchange rate. Any money earned by the oligarchs in Russia could be converted to US dollars, or more commonly, British pounds at a rate higher than the free market would normally dictate. Russian government paid a lot of money to maintain this exchange rate, but all it did was help wealthy and corrupt Russians spend money on other expensive things. In this capital flight meant that the government had a hard time raising money and relied on international borrowing. This all came to a head in 1998, when a failed Chechen war and the Asian financial crisis collided. The new Russian Federation experienced its first economic crisis because of these factors combining. Government was no longer able to pay its debts and exchange rate fell sharply. Mismanaged industries were unable to attract foreign and domestic buyers, and businesses were unable to pay their employees, resulting in widespread workers' rights violations across the country. Foreign investors fled the country, further driving down asset markets and causing a run on the reserves of the Russian Central Bank. The World Bank and the International and Monetary Fund tried to intervene with an injection of $22 billion. These institutions were happy to help, not only because it was their primary function, but also because no one wanted Russia to revert to socialism. Unfortunately, and perhaps not surprisingly, it was later revealed that up to $5 billion of that injection was stolen by connected officials as soon as the money arrived in Russia. However, in this sharp decline, following a rather disappointing decade, served as springboard for the Russians. Russian luck started to turn around after this crash. Russia was also a major beneficiary of the steady rise in oil prices that would be felt over time. The following decade, it was at this time that Vladimir Putin took over as president, succeeding Boris Yeltsin. This ensured that corruption charges against the outgoing president and his relatives would not be pursued. Despite continued corruption, Russia did do well for itself over the next decade. Large industries became increasingly consolidated. Domestic market was winning at the time. Russian people had access to a financial system like what we would take for granted in the West. People were able to borrow money, find formal jobs, and use their earnings to support the country's businesses. However, an enormous amount of wealth is still being distributed disproportionately, and perhaps even if it is unfairly distributed to a small group of people. Russia also escaped the 2008 global financial crisis relatively unscathed. Its banks were so new and inexperienced that they avoided most of the issues caused by sophisticated financial instruments. They were, however, temporarily harmed by the sharp drop in oil prices at the time. Nonetheless, by 2013, strong growth had resumed, and the economy had grown by more than 10%. New president was certainly controversial, but sometimes a struggling nation needs a strong leadership to get it headed in the right direction. The issue was primarily who would benefit from this prosperity, a point that became particularly salient in the aftermath of the financial crisis. The invasion of Crimea in 2014 demonstrated this. Following the shocking actions taken by the Russian government, and it banned the provision of credits to Russian oil companies and state banks. This results in companies not being able to raise money, but it didn't do too much, because they weren't harsh, and they were rolled back quickly after the fact. Russia was also more or less ready for them. Decades of selling oil and gas intentionally meant that Russia had huge foreign currency reserves. Almost all oil is traded in American dollars, which meant that the Russian government and Russian businesses were easily able to stockpile world reserve currency. The nation did not need to use some of these reserves, and the value of the ruble did drop in international markets. But this was kind of a good thing for export businesses in Russia. However, the economy shrank, and the country experienced higher levels of inflation as a result of imported goods. Goods were prohibited, limiting supplies of everything from food to medicine to what could be produced locally. This period was not great for the Russians, but the thing is that decision makers didn't care. Russia is the most unequal country in the world. Here's the thing. We use a measurement called the Gini coefficient to measure inequality. This can either be used to measure income inequality. According to the World Bank, 100 means that a single person can control all of the country's wealth, and everyone else has nothing. The issue is that these figures are only based on data that the World Bank has access to. Russia's financial elite, all the way up to the president, have been repeatedly exposed for moving money all over the world to conceal and protect their true wealth. If Russian banks ran out of cash, they could simply tap foreign currency reserves and redirect lending away from regular consumers, all while ordinary citizens struggle to find food and build a future in a failing state. Russia hasn't ever been in a real democracy, but for now, it's time to put Russia on the National Economics Explained leaderboard. Starting with size as always. Russia currently has a GDP of 1.48 trillion US dollars. This is certainly going to fall dramatically in the coming years because of sanctions and a costly war, their economy's bottom line. But for the time being, it is the 11th largest in the world. This figure is Putin behind China, which has a GDP per capita of $10,500. Growth has been underwhelming. Corruption, mismanagement, and warmongering are a recipe for economic success in the region. That is clear in an economy that has shrunk over the last decade, despite its natural resource advantages. Stability and confidence. Well, even before the latest hostilities, you would only want to do business in Russia if you absolutely had to. Russia has a plethora of natural resources, but little else going for it. Most successful businesses in Russia seek to relocate as soon as possible to the less risky and more accommodating business environments of Europe and North America. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.